Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we'll look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature. Looking at the last print of 1394.50, we'll call it kind of a quiet day. This is Thursday, the day before Good Friday. The market's closed tomorrow. Today's the 5th day of April, 2012. And we've got some interesting formations developing in the market. We've got quite a few head and shoulders formations, which obviously are generally bearish, generally perceived as being bearish. But having said that, if we get a reversal of the H&S, they can certainly become quite bullish, and that's still possible, given the pretty impressive support that we have. We've actually been looking for a retracement to this key support. It's now around 1360 in the market. We've been looking for a retracement. We went unofficially bullish at 1130 on the S&Ps. Had to wait till officially we reached 1230 to go officially bullish. The market's now 160 or so points above that. And we've been waiting for, nothing's really changed our outlook. We continue to target, I believe our first target was 1350, so 120 point gain. Officially 220 points. Unofficially, we were screaming, we can't go officially bullish, but you guys need to buy this market down around 1100, 1130. We had to wait for the close that day. It was 1130, but it was really around 1100. But nothing's really changed our position on the market. It's generally bullish, and we're now targeting 1440 to 1460. Ultimately, our last target would probably be 1500, 1480 to 1500, but our second target is 1440 to 1460 as it stands. But having said that, we do want to add the opportunity to add to this long exposure, and we've just really seen such shallow pullbacks we haven't had the opportunity to do so. But on today, kind of a quiet day. We had a gap to the downside. You see right here, really mixed indications. These are our proprietary indicators, how we gauge the market. Red means full all-out bearish. You can see extreme bearishness there, and even though the market gapped lower, there really wasn't going to be any retracement, particularly during the first half of the session, and the market trailed even lower, accelerating bearishness and overall bearishness. Today, bullish, slight bearishness, bearish, below the trend. So we're arguably bearish, and as you can see, a little bit of a head right there, lower highs right there, lower highs right there, another head and shoulders formation. We're not going to have a free informational day trade. If we were, I'd probably call it a 2 out of 5 stars. Sell short the S&Ps right here at around 33 or 93.50, and you can certainly target the lows of the day around 87.50. So it's only going to be about 6 points or so. Bottom. You get the nice little bounce, but it's just, going into a holiday weekend, kind of a quiet session. So we'll go ahead and minimize that. Boop. Now we're looking at a chart of the daily market, and again we mentioned the head and shoulders formation. This, I believe, was a high of 17. This was a high of 20. So this is a lower high, essentially. And we had a lower high right here. So there's another arguable head and shoulders formation on the daily chart of the market. What's more, we're actually below our key measure of short-term trend following support resistance. We closed below it in an ET sell signal fashion, albeit high level, yesterday. So we need another consecutive lower close, preferably below the low of the prior day. So around 85, what we would say, would suggest full-out bearishness, but from a short-term perspective. But here's the level we're looking for. We're looking for a retracement down to around 1360. So this is going to be our opportunity to add to long exposure. We have this high at 70. I remember 70 was a pretty impressive number. This high at 70, so 60 to 70 is definitely going to be the add to. In fact, the markets love, the S&Ps love 40s and 80s. You notice a lot of our targets and a lot of our stop zones are 40s and 80s. The market very well could reverse here, particularly given the shallow retracements that we've seen. Not even getting to the level to retest this low. Didn't happen there. Not even retest 80. We may not again get an opportunity to add to our long exposure should we get a shallow pullback. But right now the market is trying to become short-term bearish. But again, we're not even below the close of the prior day, and one close does not a trend make. But right now, this could change. Bearish 20%, short term overwhelming 80% bullishness on the market. There's our unofficial buy signal. There's our official buy signal. From a momentum perspective, we have turned short-term bearish on the market amidst an intermediate-term bullish scenario. Nothing wrong with being overbought. And from a directional movement perspective, intermediate-term neutral this should read. And short-term neutral this should read. Apologize for that, but those should definitely both read neutral. Skipped over the directional movement. So we've got some interesting formations. Here's the free system, looking at a quick snapshot of the sentiment. We're getting a little bit of fear picking up, about 879, 90.9. That's not too bad. So a little bit of fear. We'd definitely like to see readings over 1, suggesting, as a matter of fact, last week we mentioned we were seeing these high levels on arguable, maybe even an up day, but right around here we were seeing these high levels of fear. Actually, it was just on the slight drop. So we suggested last week that the market was definitely going to go higher based on this extreme level of fear. Now, of course, we had the little sell-off due to complacency, low levels, but the extreme relative high level of fear, and the market did in fact go up. But right now we're looking at a head and shoulders formation, and essentially a lot of our stuff has been kind of neutral. We did come in with some sizable long exposure that we garnered in the S&Ps around. So we're actually short. MRSCM is short. Let's go ahead and look over at. We'll go ahead and minimize that, and we'll look at some of the platinum models. I believe some of these just exited, but apparently not in this form. So we're still holding kind of long. These are look at some of the platinum models. Beautiful trade a few days ago. Absolutely beautiful trade, and that's definitely a problem. That is going to have to be edited out, because no wonder that's not trading. That's interesting. So we're going to go ahead. We'll wait for that. Okay, the MRSM PTL actually got caught in a loser after just barely skating out with another beautiful win right there. We'll go ahead and pull up the old, hopefully looking at some greenery. Look at the green dot, little loss right there, but another beautiful boom trade right there. As you can see, MRCM PTL going long right around 65, dumping about $4,000 per contract higher, booking its gains. Absolutely beautiful. Getting caught in a bit of a loss there. The MDS flat. Even though it reads short, it's actually just an exit signal, so we're flat there. The R30C long, around 1390 or so, about 1392 long. R30B about the same, long, around, not too bad, around about break even. Definitely looking for these systems to follow through. We definitely need exactly what we saw over here. Only we exited a little too early there. We definitely need this support to hold, and we definitely like to see that. Everyone likes to see a market that's going to go up. Got caught. The A got caught right there, but then averaged down a little bit right there. So we're long across there. CBR booking a loss. EVMCM, small little trade, didn't really work out. It's a little too late to the party. And another long today for the ISRD, not too bad. Long on the entry today, so that's good for 88.75, not too bad. 5 points, 4 or 5 points for the ISRD. As you can see, still putting up the gains, the winners. EVR3, little bit of a gain right there, not too bad. So as you can see, we love all the green dots, as we've mentioned. Let's take a look at this real quick. We're looking at some of our platinum models. Those just exited. So the ESM, I thought we had some exits. Those just exited, losses and a couple of little gains. So really, ESM 30, same scenario, 3 losses actually, and a couple of small gains. And we can look at our, hopefully, green dots. This is what we always like to update. The green dots. Not really going to have. Oh, look at that beautiful ESM30 green dots. Wonderful. EVR3 green dots. The green dots mean we're just still making money. Still making money. Green dots still making money. EVMCM green dots still making money. CBR not really any green dots in a while. The R30A looking at green dots. The R30B looking at green dots. The R30C looking at green dots. The EMDS we'll have to click on that right there. Looking at green dots. MRCM PTL just had a green dot after that beautiful trade that you saw. The VR3 VSR green dot. So there you go. That's the platinum models essentially. We actually have derivations of a lot of these models, the VR3 particularly. We can go ahead and pull that back up. Should be right there. Here's the web page, and you can look at the, so that's the PR100, the MB250. You can actually view the stats. We're actually going to be releasing the first quarter numbers. These are through last year, I believe, or were they through February? I'm sorry, these are through February, so these will be updated next month. So these are 10 years through February. The MB250K, MB100. See if we have some of the models. We don't. Oh, well, you actually should be able to view those if you click here for the full statistical report. And the EVR3 portfolio is chock full of the EVR3. So these are just amazing models, and as you can see, all the base portfolios models continue to make money. Green dots everywhere. I will say this is interesting. We always recommend you put money to work in a portfolio. We've throughout the years, almost a decade now, one problem that we've had is people love to see you making money. And okay, you've made 100%. Well, now must be the time to get involved. They've made 100% on the money. Now is the time to get involved. It's usually not. Usually, particularly if we've had a short run of 100%, triple digit particularly, over just 90 days or less, not the best time to get involved. Conversely, the time to get involved is when we've had particularly a drawdown relative to the maximum historical drawdown. That's when we always espouse to all of our clients and all of you guys out there who just follow the videos and for the trading and for the market analysis and to check up on follow our performances. Always recommend starting after the drawdown. Put your money to work, add another portfolio, and here is your opportune time. We actually got to looking the other day. When the numbers come out, the MSA UDT is going to show a drawdown of $10,000 over the first quarter. We looked from January 1st to and that's probably one of our most popular portfolios. It's just a $10,000 portfolio. It's aggressive. It's one of our most aggressive, meaning it has well, we can just go to it. It has a maximum drawdown. We can open that. Has a maximum drawdown. These are kind of old numbers, but they go for 3 years of 120% on the 10,000. You can trade this portfolio with 15, 20,000, whatever have you. But the minimum recommended, the margin is just there's 6 contracts, so the margin is just $3,000. That gives you $7,000 and cushion in case you start at the less than optimal time. We'll look at the equity graph right here. So the average drawdown you're going to have is about $4,000. Kind of an extreme drawdown, $8,000. You might have had to refund if you started with just 10 and had that drawdown. But most of the time you're going to have drawdowns that are within the $7,000 marker. So you have the $10,000. You back out $3,000 in margin. That brings you to $7,000. Most of the time when you start, you're going to be able to withstand these small drawdowns, still have your margin, and still be able to come back and make more profit and more profit and more profit. So that's MSA UDT. We can scroll down. These were the numbers that are going to be updated for the quarter. These were last updated, and we had the MSA UDT. There you go. Up 470% last year, I think, from January through December. Pretty impressive. These are third-party tracking live results. Delta DTS. I think that's also had a $10,000 drawdown. So a great opportunity to get involved. I'm not sure what we're looking at here. Looks like the MB250 with a $94,000 drawdown, almost $3 million in net profit after almost $500,000 deducted for slippage and commissions. I'm not sure why the MB. I guess were we on the MB? Were we on the MB 250? I thought we were on the EVR3. Huh. May have to look in. Yeah, that's the EVR3. It even reads EVR3 portfolio. Can't imagine a $94,000 drawdown. There we go. Must have clicked the wrong thing. So here's the EVR3, $17,000 maximum drawdown. That's after deducting 66, we'll call it $67,000 in commissions and slippage. Pretty impressive over the last decade. The EVR3, and you see the certain derivations of the EVR3 that we just looked at, still putting up the green dots, but again, this will be updated next month. So 5-2, 2-2 to 5-2. So that's a quick look at our models. Our few of our key trading systems is our historical performances, but the main thing we wanted to talk about was back here at the MSA UDT. You saw that maximum historic drawdown after these records are pulled derived from TradeStation and deducted $26 for round turns per trade for commissions and slippage, so comparable numbers to the other deductions. But this is the key interesting figure. We've just had a $10,000 drawdown, so it's essentially over time this is going to be one of your best opportunities to make money, so much so that we've actually, it's such a great opportunity to get involved with the Delta DTS, the MAP DT, or the MSA UDT. With the MSA UDT, if you, or the Delta DTS, if you subscribe to either of those for a year, you're going to save 30% on your subscription. Let's see what we come up with. We'll go ahead and add the MSA UDT to the cart. Well, I don't know why. There we go. So we'll add that to the cart, and we'll drop that out. Now you've got to purchase four. These are the rate is about $600 a month, or it's $100 per system per month, comparable to everyone out there, or $788 for all 6 systems for 3 months, just $788. Yeah, pretty good deal. Then you purchase a year, so that's 4 quarters. So you enter 4. Now let's see what we can get in terms of savings here if we purchase 4 quarters. Oh, it expired March 31st. Well, we'll work that out to where you can. We'll extend that really primarily, so that offer expired on the 31st. We should be able to extend that based on from a discretionary perspective, because this is such an opportune time to get involved in the portfolio, given that it's had a $10,000 drawdown. And essentially, if you'd have started 3 months ago, you would have had to withstand a $10,000 drawdown. Now you don't have to. That's in hindsight. That's history. The maximum historical drawdown is about $12,000, so you're right there. So the opportune time is now. We're going to give you savings that will work out to about at least $1,000 off the year. Here's what's interesting. We're also going to offer, so it's going to be about $2,200 or what have you. We're also going to offer you savings of commissions of 22%, over 20% savings on your commissions through the brokerage, which includes your strategy runner fees and your account management and actual commission. 22% savings on that. And then we're also going to offer you, given that we know this is such a great time, the double your money back guarantee that we offered late last year. If we don't double, if the portfolio as tracked by us in Strategy Runner, MSA UDT, the one that we're referencing is down $10,000. It's tracked every time, real time, every day. Doesn't make 100%, essentially $10,000. You get your subscription fee back. So it's an amazing opportunity. If you guys have any questions, go to the website, chat with the support team live, or shoot us an email to MiniAnalyst.com. And again, hope you guys have a great weekend, and we'll see you next time.